tensions in the Middle East and Russia-Ukraine are unchanged, really, so it's already priced in. So there's nothing there for me to jump into gold. So the next thing would be just for sort of the, the quote-unquote perfect technical setup. Anyway, guys, Chris is here to take over the show, so don't leave. I'm sure we're going to take a quick break after I leave. I hope you all have a great day. I'm sure I'll see you again either this week or next week. So thank you for having me as always. Hope you all have a great day. I'll see you very, very soon.
'Twas the night before Christmas, and all through the house not a creature was stirring, except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at a1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
What's happening, everybody? Let me share the screen here. Happy Wednesday and happy perfect economic calendar for the U.S. Oh my gosh, our economists are the most brilliant people in the world. We did exactly as forecasted. How is that possible? Here's the Bloomberg calendar. I actually had a little snicker this morning where it's like they print it and it becomes real. So here is our CPI data for this morning. Month over month, 0.3 came in 0.3. CPI year over year, 3.3 came in 3.3. We have core CPI index slightly higher at previous was 321.67, now 322.66. Not a lot of people are paying attention to that one. That you see that is one impact versus the 2 and 3. I would say the most important things would be this right here. You have your core CPI year over year, and you have your CPI year over year. That's going to be the big headline talk that everyone's going to be trading, and the market apparently is excited about that, even though this is higher. Also, from a statistical standpoint, I took some screenshots this morning that I thought were interesting, so I will share those. I do have a trade set up for today that I'm interested in. I want to see if the SPY gets up to 610, and I'm going to look for a butterfly spread to fade that just in the near term, probably a Thursday or Friday expiration. Let me take 2 screenshots here. Okay, so we have price changes over last year. Transportation is up 7.1%, shelters up 4.7%, medical care is up 3.7%, food away from home 3.6%. This is all positive, by the way, so these are things that are more expensive. Electricity 3.1%, overall CPI is up 2.7%, okay, year over year. Gas utilities 1.8%, food at home 1.6%. What's gotten cheaper? New cars, used cars, gasoline, fuel oil. That's gotten cheaper. I keep saying this. If it wasn't for oil prices being at these lows, I think inflation would be a lot higher and a lot stickier than it is. So it's like the slow, like, 2.4 to 2.6 to now 2.7. Fuel prices sitting at these lows, they're going to have to stay there. The other statistic here, U.S. core CPI has been above 3% for 43 straight months, the longest period of elevated inflation in U.S. since the early 1990s. So is inflation tamed and under control? No. Okay. It's not. But market seems to not give a crap. And here we are like 0.4, 0.5% higher. So anyway, I'm looking at a trade like this today. I'm going to wait and see if it happens. But if the SPX gets up towards 6,100, which is right back up towards the all-time highs, I'm going to look at a butterfly trade on that. It's not a butterfly trade. It's going to be a broken wing trade or a skip strike trade. It's going to look like this. This is my risk line. I'm going to take in some tail credit. I'm going to put in my profit trap and then look at my risk. So I'm going to try to get $1.50 to $2 on this trade, give myself maybe a 3-to-1 profit trap, and then risk, let's say about $3.50 to $3 max risk. Okay, so if I don't get the trade opportunity today, then I'm not going to take it. But basically, it's going to be coming back to all-time highs and looking to fade that. I'm looking at market makers to try to fade the S&P around the 609 to 610 level on the SPY, or right around that 61 handle on the SPX. So just food for thought. Okay. I also have a trade on NVIDIA. We're trading at 136. I made this this kind of proclamation yesterday during my live session at 3 p.m. on YouTube. This is the timestamp yesterday at 3:57 p.m. I say this: Nvidia hits the 200 EMA on the daily chart before it hits all-time highs. Again, I could be wrong, but I'm willing to throw it out there and say, okay, I've time-stamped it. This is what I'm projecting. We have a really nice head and shoulders pattern on Nvidia. Okay, we are just above these highs, forming what seems to be a pretty nice topping pattern. We're also 480 bars or better away from the 200 moving average. Okay, so it's a bar count situation, and it's a stretch away from the 200 moving average situation. And take a look at this bar count. Nvidia bar count is around 477 bars. That's a lot on a daily time frame. The percentage away from the move as well, also pretty extreme. 46% when we topped out here in June, and coming back to the same price, we're sitting around like 20 some percent. That was around 28%. So, am I trading this south? No, I'm not. But I'm saying what I'm waiting for is if we come back into this 144 to 200 moving average, I will establish my long positions down there. So I'm going to see if Nvidia will project this move. If I zoom in, I've got two levels of symmetry that I'm also measuring. So here is high, low, lower high, lower low, and that would put Nvidia on a symmetry correction towards around 125. So if you want to make a note, like 125 is a pretty attractive level to start looking at some longs. The other trade would be the full-on measure move of the head and shoulders, which would be there's the break of the neckline, left shoulder, head to neckline, right shoulder. If we breach, so we go high to low, and we measure the neckline, and it's this projected move, which is around 110. Okay, so if there's two levels that I'm watching and two levels I'd want to say this is where I want my break even to be on Nvidia, 125, 110. Obviously, 110 would be better because it's a lower price. But I don't know if we're going to get that full measured move of the head and shoulders. It would come back down to the 200 moving average, which makes sense to me. But also, this 200 moving average is a dynamic target. So if it starts going higher, 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 and we have a high, low, lower high, lower low, and we find it, that might be where the market bounces. Okay. So could this take the next, month or so to play out? Sure. Could we get up to all-time highs and I'm dead wrong? Sure. But I'm just making a little projection here that I think we find this 200 moving average before we breach all-time highs. Am I interested in owning some Nvidia? Yep. And I'm going to use these credit spreads in order to own it. So a 1220 or a 1227 expiration. If we are going lower on those, then I'll probably end up cashing in the long put, taking some ownership, and then quickly working the stock price down, adding a covered call to hopefully grab some profit. Also, since we're up on the day, I think I'm going to go ahead and take some profit on SVXY. I would be facing some ownership on this instrument, SVXY. I got that one for two small winners today. Okay, so let's go SVXY. I have all these December 20th. The 35 put, not really worried about that one. That's going to be pretty much full profit. The 55 and 54, I'm up for some profit there. 440, and this is during that July to August drop. I was basically scaling in on puts. I could take the ownership and repair it, but the premiums aren't that great. If I looked out on SVXY, let's go SVXY. If I look out, let's say, a couple of weeks, an at the money call is only going to get me $1. Now that's not bad, but I'd rather not tie up the, basically I'd be on the hook for like $10,000 cash to own 100 to 200 shares. 200 shares would be $10,000 cash. But I wish I could get better premiums. I'd rather take the chance of owning, an Nvidia with like way higher, way richer premiums, or even a coin or MicroStrategy. I mean, somebody told me yesterday that like MicroStrategy is being added into the Nasdaq. My first thought to that was you're just going to see a lot more volatility now in the Nasdaq. I mean, not to say that MicroStrategy is bad, but for a company that's really lost money forever, and all of a sudden now it's just tied to Bitcoin, it's essentially like having a Bitcoin stock in the Nasdaq. We already have Bitcoin ETFs, Anyway, another conversation. But I don't think the premiums are good enough in SVXY for me to justify wanting to keep them and take the ownership. So I'm going to take the profit. So I collected 440 on this one. I'm going to go ahead and try to close this one down. 440 now trading for, see if I can get a little bit better price out of this, $1.50. Filled at $1.50. All right, that wasn't bad. So let me just clean these up in these accounts. So 55 is done. 54 traded at 430. 430 is now trading for $1 or less. Let me try to get 90 cents. 95 not filling. 95 isn't bad. Filled it at 95 cents, not bad. Okay, and then 53. We're above 53. I'm up $305. I got this one for $365. Okay, let me see if I can get 65 cents out of this one. 65. Okay, so I just cleaned that trade up there. That was pretty decent profit. I mean, I'm up over $1,000 on this one, so I'm up 10 grand on SVXY. I'm just going to take the profit and protect it, as opposed to taking assignment, reducing some cash and buying power. I am in the process of trying to get more cash at the ready, more deployable cash when it's an opportunistic time. Not there yet. Now, this $35 put, I can just let that one go to full expiration for next Friday. Highly unlikely we're dropping $18 on SVXY. So let me move through my accounts here. I'm just going to take care of these. So these are all up. I mean, right now I'm looking at about $1,000 to $1,200 per account, and I'm going to take the profit on those. So that's pretty decent. All right, close this one out. $1.50. Filled at $1.50. Not bad. Not bad. 358. 448. Filled there. And 53, that was for 60 or 407. And 60, I got out of 60 cents. Nope, 65 maybe. Okay, I guess this needs me to get out of 65. 65 got filled. All right. Cool, cool, cool. Let's take some profit. So close this one out, $1.50. $1.52. 431 trading for $1. Get this one for 95 cents, hopefully. Son of a bee. 98. Filled at 98. All right, one more here. I've got a few accounts to manage, so just give me a few minutes. This 53, close this one out for 65. No problem. 64 got filled. 54, 420. Trading for $1. Taking profit on that one. And then the other one is the 35. I'll let that one expire next week. 54. Close this one out for $1. Good. I'll let the other one expire. Okay. This will move a little bit faster now. Good. No exposure on that account. No exposure on that account. And this one should have a couple trades in. 55. That's up $300. $1.52. Dollar. And last one should be 60 cents. Cool. All right. So those are all closed out. That limits the exposure. That books some decent profits. All in all, let's see if it shows it. SVXY closed out for about $6,400 in profit with no assignment. So I'll take that and call it a day. All right. So what am I watching for today? Like I said, we got some market maker levels between 6070 and 6100. If we come up to 6,100 today, I am going to look at a butterfly spread. It's going to be a broken wing butterfly. I have the tail credit, the profit trap, and the risk. This would be live price. So if price inches its way higher, I want to take as much profit out of that credit side as I can and mitigate some of that risk. Okay. So essentially, I'm looking to, fade the all-time highs later today into tomorrow and see if I'm right. If I'm wrong, I'll take the risk. If I'm right, I've got a profit trap potential of 3 to 4 to 1, and also my tail credit in case that market maker move is just going to drive this price back and forth. I think this is an interesting week considering we have all-time highs and we did tap the lows. So if all we're doing this week is staying inside of this range, right? I mean, that's essentially what yesterday was, is we got to the lows and we came right back to the middle. So if there's a way that we're just sitting right here, think about this going into next week's trading. Okay. Next week's trading with the Fed on Wednesday, it would make sense this market is sitting pretty much right in the middle of some type of range. And we're either going to justify a breakout post Fed or we're going to fail. So I've said this now for the last several weeks. The only real derailment that I see by the end of the year is something with the Fed. Inflation data came in exactly as expected. Don't be surprised to see tomorrow's PPI news come in exactly as expected. I mean, it's like economic calendars. They're trying to make this as boring as possible. It's just like, oh, it's right as forecast. No surprises. I mean, I don't believe this data for a second. I still look at, Trueflation, which has been super, super hot since these lows. And even this right here is a higher high, right? This was 2.84. Now it's 2.93. So don't tell me for a second that our inflation's under control. The only thing that is keeping our inflation under control is this. Okay. Inflation is not under control if we see prices on oil breaking out. Now, I don't know if that trade's going to happen, right? We have made lower highs on oil. We haven't broken out yet. We are, literally this level. We're peppering these lows at $67. But if we break above 71 and it looks like we're inching up into like $74 to $75, it's going to be tough to justify, lower inflation. I think actually I'll go gas prices, gas at the pump. I'm looking for a line graph here. Come on. Well, I had the gas prices. Gas at the pump, U.S. all grade. Yeah, so I favorited that thing. Inflation up. Trying to get that website to load. It was just a line graph to see, is our gas at the pump bottoming? I guess I could check the AAA prices, AAA gas prices. So again, I know this isn't a big deal, but to me, this is something I'm tracking very closely. Current average 302. Yesterday was 301. A week ago, 303. Month ago, year ago. If our current average starts to go higher, right? All of a sudden, let's say our current average is getting higher than a week ago or than a month ago. That's our bottom of gas prices. That's oil going higher. That's energy prices potentially increasing. That's inflation with the same old story. So is that enough to, derail the market? No, but it's enough to change the outlook on the Fed. That's the whole point. So watch tool right now. I think the probability went up that they're still going to cut next week. Let's see what the number shows. Yep, look at that. I mean, you can make the prediction right now and say, like, it's in, everybody. The Fed's going to cut rates next week. There is a very low probability that the Fed is not cutting. Okay, but if they cut in December, where's the forecast by the end of December of next year? It's still the exact same, right? This right here, this highest probability for December of 2025 is representing 50 more basis points in cuts. So likely that's going to be 2 cuts. If this one is our second highest probability, that would be 75 basis points. That would probably be 3 cuts next year. And when are those going to happen? I don't know. Could it be January? Maybe. Could it be March? Probably, right? And I would say if it's a 2-cut scenario, it's probably going to be a March and maybe a Q3 or Q4. So one in Q1, one in Q4. We kind of just sit and do nothing in the summer. If it's 3 cuts, it could be again in January, again in March or May, and then end of the year. So again, we've talked about this Fed stuff a lot, but the expectations are 2 to 3 cuts by the end of next year, and the probability of next week is super, super high. This has gone from, mid 70s down into the 60s, up into the 80s. Now it's 96%. Pretty certain we're going to see a cut, and the market's already expecting it, which is why the market's justifying ripping higher, trying to go to all-time highs. We're at 57 all-time highs for the S&P. Could we get out 58, 59, 60? Maybe. Think about the trading for the rest of this year. We don't have a lot of time left. It's this week, right? It's this week of trading and next week of trading. Those are the last 2 uninterrupted weeks of trading. Christmas Eve, Christmas Day, New Year's Eve, New Year's Day, those weeks, probably not a lot going on. Brokers are going to have limited hours. Even the Forex market will be limited hours. Equities markets are going to be closed a couple of those days. So we have this week and next week to kind of put the market in orbit. We already have momentum from the election. We've already carved out new all-time highs. Can we get back up to the highs and drift through the rest of the year? Maybe. So this is why I'm saying watching this price action very closely this week and next week is really important. I'm not forcing a bunch of trades. If the market wants to go into orbit and stay there and drift higher through the rest of the year, be my guest. There's money to be made. Okay. But I'm not getting aggressive here when I think that a snap correction in Q1 or Q2 of next year is likely. The melt up is fine. Not my favorite. It's fine. Will I participate in it? Yeah, but not aggressively. I'll just let the positions that I've established, I'll let expirations go to full expiration instead of getting out early and reducing some of that gamma exposure. Right. But these 2 weeks are going to be critical because it's the last 2 weeks of trading for the year. That's going to be full trading, uninterrupted, and we'll see where the price gets us. I think if we're sitting at all-time highs post-Fed, the market continues just to drift higher through the holidays. If we're sitting off of all-time highs because of the Fed and there's some adverse reaction to that, I don't know. Buckle up for some interesting, closing by the end of the year. Okay. AUR, I don't think I closed it. No. I'm going to give it some time. AUR is out to next Friday, right? Do you think tariffs proposed by Trump will ruin the inflation story? Ruin the inflation story? I mean, we haven't tamed inflation since 2022. We've had it go lower, but we have not gone to any better trends. And I keep going back to this chart here. We are sitting at the same inflation levels as summer of 2023. So all we did was had supplier, the supply chains essentially come back in line and things got a little bit back to normal. But we are sitting at elevated inflation levels for 43 straight months of higher inflation above 3%. Tariffs, what are we going to do? I mean, if Trump comes in and we start having, real bills getting passed and aggressive tariffs being thrown out globally, I mean, Trump wants to see a weaker dollar. He's going to want to see a higher stock market. He's going to want to see everything that justifies, like, the economy's so strong. We got the greatest stock market in the world. The guy speaks in hyperbole, So we're going to play a weaker dollar game. We're going to encourage the Fed to keep cutting. And I'm telling you, if we introduce tariffs, like, how is that not inflationary? You add friction to the global economy, it's inflationary. So the Fed is going to be, it's already a difficult soft landing story, but it's going to be even tougher when they're back against the wall to have all this pressure to keep cutting rates and somehow try to outgrow inflation. A second wave of inflation would be absolutely devastating. And if we kick this can down the road and inflation surges to, let's say, greater than 3% again or greater than 4% again, that second wave is just going to be like frog in a pot. And at some point when it turns over, we don't have a 10% correction. We have like a 20 to 30% correction. Because at some point it's like this thing is just melted up too much, and it's going to be just a massive, massive reversion. So I just think about this, like, wouldn't it be nice just to have like normal market cycles instead of it runs so hot that it just breaks, and we're right back to the same story we've talked about since 2018, which is we have booms and busts, and there's no normal. There's no normal. It's either it's the greatest thing in the world and trade to euphoria until it's just absolute greed, or it is run for the hills. The market is collapsing, and hopefully you're not fully invested because you're going to sit on a 20 to 40% drawdown. It's like there's no in between. And that is the difference between a normal market that would go from left to right and try to move steadily higher to the emotions of the market where we have these bigger, wilder swings. And that's really what we've been dealing with, you know? So this is why I have cash in my portfolio, because there will be an opportunity, and maybe I'm going to be patient. Call me, this is a little bit of a Buffett play. Am I a net seller of stocks? No. But do I have cash at the ready? Yes. Am I trading mostly options? Yes. Is everything I'm doing risk defined? Yes. Am I eliminating my outlier risk? Yes. You know, so I'm just trying to tighten things up. And if we melt up higher, fine. It's easy to have the melt up higher, but I will be extremely cautious on getting more aggressive at these highs. If I want to participate, I'll participate with option income trades and see if they work out, and I'll still, do my thing and generate, whatever I can get. The last 2 or 3 months, it was actually pretty decent. September was like 4+% for my portfolio. October was 4+% for my portfolio, and November was almost 9% for my portfolio. So even though I'm lightly participating, I was pretty bullish going to the election. Now that we've, made a nice run, we've had the melt up, and we're possibly still grinding higher. I'm just going to let that kind of drift happen, you know? So anyway, all good. Okay. So just thoughts. Any other stocks that I like today? Let me have a look. Let's go to see here. Interesting. Okay, I'm going to take a look at Google. Google had a big old pop yesterday. Oh my gosh, Google. Quantum computing, that's all it takes. Is that going to be what everyone's earnings calls are saying next week in 2025? Is quantum? We've got quantum computing chips. That's insane. So all these trades on Google are going to be positive now. So let me have a look. So Google is up around $6,600 with no ownership. Let me have a look. Google, I have, let's see, ratio spread for next week. Why is that a December 19th expiration? I don't know. Shouldn't that be the 20th? Strange. Anyway, I've got a ratio spread there. So I did the 135 by 130 ratio spread. I also hedged that. I did the 155 by 150 ratio spread. That's out to May of next year, March of next year, and December of next year. I mean, honestly, when I was looking at Google in this area, I was thinking, well, if we just chop around here, I think it's a good spot to look to see if we can go higher. Well, what did we do? In 2 freaking days, we went from 175 to all-time highs. Incredible. Now, the question is, are we going to sustain a break above these highs? Right? I mean, in this giant tech space, are we going to see a giant range? Probably not. I mean, look, Meta's blown through the highs. Apple's blown through the highs. Microsoft might be able to play catch up now. But if we look at these, okay, look, Apple, Mag 7 is carrying the stock market. We are at all-time highs on Apple. Amazon, we're sitting at all-time highs. Google, we're sitting at all-time highs. Meta, all-time highs. Microsoft, making a run higher. Not a bad thing. Can we get back to these all-time highs? Mag 7 is helping the market drift higher this year. Okay, there's Netflix, all-time highs. Nvidia, not so great. I made that claim that I think we're going to hit the 200 EMA before we hit the all-time highs, but we have the real, or the traditional Mag 7, if you will, the Fang Man, the OGs, doing pretty darn well. You threw a Tesla in the mix, we're also eking out some fresh highs, and Tesla is just shy of all-time highs. So your largest stocks are cranking, and here's your FinViz heat map. When you've got your biggest stocks in the world sitting here with bright green, that's enough to lift the entire market, and it is. So is this enough to see these crazy amounts of flows going into Mag 7 drift up higher? Sure, because it's market cap weighted. So when your large market cap stocks are ripping higher, the whole index goes with it. So Don't fight the flows because those flows are going in heavy. Okay. All right. Let me do some other top-down stuff. Let's go dollar, oil, gold, silver. Take a look at some currencies. We have some rate decisions coming tomorrow. What did the BOC do today? Did they cut rates? BOC cut as expected, 0.5%. Was there any reaction in currency strength? It got stronger. What? Canadian dollar got stronger. Well, that put a little pullback on my dollar CAD. We were up to 4,200 with a pullback today. It's not stopping my trade. I'm still in this thing for the run to 45. It's just offering some pullback opportunities, but I'm going to stay long dollar CAD. Anything on Euro CAD? No. Anything on? Actually, well, no. I don't like it enough. Pound CAD right at the highs. I mentioned this last week. If you're looking for a sell opportunity on Pound CAD, it's right up here at resistance. Not a bad spot. Do I love this trade? No, but there's some good. If we hold this level, stop loss is pretty tight. There's your risk and reward. You've got a pocket. You've got range. I mean, even if it was a range trade, there's some good reward to risk there. This is helping the CAD Swiss though. CAD Swiss right back to those equal lows at 6,200. We had a 61.91 low tested several times. We bounced and ripped right off of that. That's pretty perfect. So I'm still long my CAD Swiss. Okay. I'll keep an eye on that one. All right. That was interesting. I didn't think that was going to be the case considering they cut 50 basis points. We had the Swiss National Bank tomorrow morning expecting to cut 25 points, as well as the ECB at 8:45 expecting to cut 25 points. Actually, there's a 8:15 expecting to cut 25 points in the press conference with Lagarde at 8:45. So more banks coming, and then Fed and BOJ next week, Wednesday and Thursday, back-to-back days. Okay, all right. So there's some rate decision stuff. Let's go dollar index. Dollar index still, like I said, in the 4-hour time frame, playing off that support. Did anybody buy the dollar index off that 200 moving average? Okay, I had said if you bought it in here, stop loss below, as long as there's not a daily invalidation, looking to see if this goes higher to get back to the range. So I'm just looking at a little bit of long dollar into the end of the year. Stop loss could be moved and trailed. You don't have to take on a lot of risk here. Oil, watching. Let me go back to the daily time frame here. We have not broken a recent high in the last month. From November 5th and 6th and or whatever that is, November 5th or so, we have made lower highs. We have made several equal lows. So are we going to break the floor, or are we going to pop to the upside? I don't know, but whatever happens, inflation bad, inflation better. Depends on what price does. Okay. Natty gas. I want a lower price on that gas. I'm probably not going to get it. My bull call spread at 69.22. Let me see what this is. I might take some profit in this one if I have it. $30. I need to stay above 69. This is 68.83, so it's not quite there yet. That's a January 15th contract. I get a little bit of time on that one. All right. So I'll give this one some time. I'm looking to see if my CL contract will stay above $69. Nat gas, I'm out of it. I looked at this one as a head and shoulders. I could have been a little bit more active on the right shoulder. I wasn't. I was just trying to see if we pulled back to an attractive level. We did not. We're now above the neckline. So if you're long, you got to measure move here, low to high. There's a breakout pattern, and then you can measure that move up. I mean, I wouldn't be surprised to see natural gas up into the 4 to 450 range in the coming months. But if we have a big pullback, that's fine. I'll look to scoop it up at a really decent price. As James was saying on gold, we have had a 9 to 10 day chop fest, and then finally gold is making a run higher. We've got 3 strong days. Look, if gold goes to hit all-time highs again, awesome. Okay, I don't know if I'm going to be aggressively long. All I'm doing is I'm getting more and more profit on my gold futures, and I'm getting more and more profit on my GC or GLD. Sorry, I added GLD here at the 100 moving average. I put in some credit spreads as well. I'm not long anything other than I added some more shares of GLD, and I added some credit spreads of GLD, and I added some short-term GC futures. Okay. Look, if we go to all-time highs, awesome. But I wouldn't be surprised if after such a strong trend, if we have a range trade on gold. Okay. Why do I say that? Because we're also getting gold pretty overstretched from the 200 moving average on a daily time frame. Okay. So gold going higher is awesome. If you're speculating, I know a lot of traders are trading gold. You're trading the leverage gold. You're trading this, just like you would a Forex pair. That leverage is good. You're looking for the breakout. Hopefully we are going higher without much, without much to the downside. So, if this is a breakout, I would look for the smaller time frames to stay bullish. It makes some sense to be targeting these highs just shy of 2,800 and get what you get. But for me, the bigger picture is I'm going to wait for the 200 to catch up. I'm going to wait for this price to see if it stalls and find a range. And I will be looking to invest at range lows until we ultimately do break and go higher with a sustainable move. I think there's a lot of calls for 3,000. It could be self-fulfilling, but is it just going to go right now to 3,000? I don't know. I don't think so. So if you've got some profits running, probably wise to move stop losses, protect your risk, and see if it wants to run higher. When will I take profit on Google or Amazon? Google can rip to all-time highs because it's there right now. It clearly had a bunch of buying power in 2 days. But I look at Apple. Apple's at all-time highs and keep pushing higher. Meta's at all-time highs and continues to push higher. Google hitting all-time highs. I think there's room for that to run. So I don't have a price target on Google outside of it can drift above $200, and then there's nothing more than we pull back to previous all-time highs. Amazon also broke all-time highs. I'm seeing upgrades in analyst targets towards like $240 to $260. We're trading at $225 to $230 on Amazon. So I'm going to let Amazon run. I'm going to let it melt up. If the market wants to flow into Mag 7, I'm going to ride them. Okay. So what do I keep doing? I'm going to keep rolling calls and adjusting my levels. I'm going to get it called away eventually. I own shares of Apple at 175. They're going to get called away at $200. I rolled it up to 205 and out for another 30 days. I'll roll it out another 30 days and up to 210. I'll keep doing that to increase my profit potential. There's shares I don't mind owning, but obviously more importantly is that I buy puts to protect the downside. So that's what I'll do is just buy cost-effective puts if we have a downturn. That's all. So I'm looking for, Google to cross over $200. I'm not taking profit necessarily. I'm just going to roll some calls and try to get things, just increase my credit intake and take down my cost basis. Silver also looking pretty darn good. I added some positions on SI as well as SLV when we had a pullback into the 100 and 144 moving average. So am I doing heavy amounts on silver? No, but I'm up like $30,000 to $40,000 right now. So let me check my GC. So I've got about SI. I've got $5,500 in silver futures. I've got $659. I've closed out on gold futures for like $5,000 already. Plus I had some GLD options earlier in the year for like $10,000+. Anyway, silver futures, I have a lot heavier position in silver futures. These are looking great for the end of the year. Okay, so end of the year into January, I'm just going to stay on my silver futures pretty much for full expiration here. I go to GLD. GLD is up right now $12,500, and SLV is currently up $36,251. So I'm gonna let those profits run. My measured move on SLV is not taking profit now. We had highs all the way up to 34.89. I'm looking for this to get up to 35.88. That is my big target one. And there is probably some profit taking I would like to take there. I did the numbers on this. I would be turning that $35,000 into closer to like $45,000, give or take. Yeah. So, I don't mind that, but I did the numbers on this yesterday. And if I hit my second measured move at 48, that goes from, let's say I've got 35K of profit here. Now we're talking like 73K of profit there. So do I want to, take profit and have to rebuild the entire position? No, but it's probably in my best interest to take some profit or protect something. I can always reestablish and rebuild. But it's nice to know that if I don't have to do anything other than manage, that I've got another like 100% upside. That's pretty good, you know? So anyway, I'm going to let silver run. Silver has been one of my favorite precious, it's not even precious metal, it's just a metal. But it's been one of my favorite trades. Once gold ripped the way that it ripped and we started hitting all the measured moves, that's why I started looking at this chart right here. Okay. I'm looking at the comparison between gold and silver. Now, where would I get a little bit more protective on silver? Well, if silver comes back down here to a 2-year range and silver is stronger than gold, I might look at taking some profit. Okay, even though this chart doesn't mean that one is necessarily a bear move or not, like they're both going higher. It's just a matter of which one is going higher faster, right? If this is heading lower, that means that silver is gaining on gold performance wise. If this one's going higher, that means gold is gaining and outperforming on silver. But both of them going higher is a good thing, in my opinion. Okay, Bitcoin, there's a fun conversation. We're right back over 100K again. So we a little bit of chop. Are we hitting some oversold or overbought conditions? Maybe. If this looks a little choppy like so, just be ready for a pullback. Okay, I've said this number here, 90K to 80K. That to me would be a spot that I'd be looking to buy or add more. If we don't have a pullback and it just keeps going higher, then I'll be watching for some type of divergent top before I start protecting some profit. And I'm going to keep reallocating. I mean, I'm sitting on what initially started about a 3% allocation, has now grown to like a 6% because of my profits. So if I protect the profits, I'll probably balance this out at like a 5% allocation to my portfolio. I think having 5% Bitcoin, personally, I've got about 10%, but my clients have got about 5%. So I'm happy with that. And then I'm probably going to maintain a 3 to 5% stake in gold, 3 to 5% in silver. That's not bad. So if I go 5, 5, and 5, so 15% of my portfolio between Bitcoin, gold, silver, I don't know. I could probably justify 20. I just don't know which one I want to own. You could speculate and say more Bitcoin, but that's going to bring in more volatility in my portfolio. So I truly do like silver more from the technical side. I might go a little bit heavier on silver going into 2025. So gold is great, gold's fine, but silver, if I get the measure moves that I want, I'd rather have the bigger trade and the technical upside, not guessing at all-time highs. Silver has measured moves. Silver's been to $48 before. If it gets there again, awesome. So I think I'm going to lean a little heavier on silver for next year. All right. Respectively, your Bitcoin correlations. BITO, did I take any profit on BITO? I don't think I did because I'm out to 2026. Right now, my BITO positions, they are up around $24,000. I do have some shares of BITO. I also have some calls. Okay, so I've got a call. These are long calls out to January of next year. Yep. I mean, it's funny. Like, how am I possibly taking losses on BITO? Well, I'll tell you, because of this crazy dividend, this thing has not correlated the same way as Bitcoin. So even though Bitcoin's at all-time highs and through those highs, obviously BITO is nowhere near that. So, where did I buy some call options? Basically in here, but I paid enough premium that I'm not making any money on the trade. So the time decay is costing me money. Now, that being said, I'm still showing like, okay, if I lose, let's say, I don't know, $1,700, that's still, $24,000 net profit. So it's not perfect. I'm taking some losses a little bit, but going out to 2026 with $14 calls, I mean, if BITO somehow finds a way to get up into these highs again, I can turn what was a call option that cost me $5 and turn it into maybe, $10 or $15. Like right now, this call option's already up. What's my price? That call option is up to, I mean, I'm up almost 100% on the call option right now. Is that enough? No. I'm going to try to get this to run. I've got plenty of time. So for my time decay, I'm still in the early stages of that theta. All that means is time. So if I trade this for the next like 3 to 6 months, if we're here, I will have some really good value on these going higher. The second third, or the second half of 2025, we start to get a little bit more time decay. I'm going to get less value, and then once we get into late 2025, I'm losing value in time. So I mean, by that time I need price to really be aggressive. So I'm hoping that for the first, let's say Q1 of next year, like we're still ripping higher, 100 plus on Bitcoin, 110, 115, 120. If we get to those levels, then maybe BITO can keep going higher. Okay, IBIT, much better correlation. Okay, I'm going to hold on to this one. I'll keep adding credit spreads and leveling in. FBTC, I'm just going to wait for a pullback. MicroStrategy, behaving fine. Coinbase, behaving fine. A lot of income trades there. Ethereum, good to see a nice little comeback there. I took some profit on EETH. I've got some other ones there. That's another big chunk of profit. But somebody asked me yesterday about Ripple. Is anybody doing anything on Ripple outside of you've already had it and now you had that huge like 4 to 5% move and you're happy now? I mean, I've had Ripple since like 2016 and it was just a piece of crap until 2021 or 2022 when I just finally could do something with it as a US investor. So I converted it into Bitcoin and I actually made more money with that conversion than I did if I had that 400% run. It wouldn't have mattered. So I look at a chart like Ripple. I mean, there's nothing to do on this. I mean, if somebody's trying to justify telling me like it's going to $5, it's like maybe it is. Maybe it's going back to $1. So I missed it. I'm not chasing it. I'm trading Bitcoin and Ethereum. That's it. If is anybody doing any reading on quantum computing right now and seeing what Google's doing? Like this whole Google chip could be like threatening the entire blockchain in the next 5 or 6 years. So who knows? This could be like this weird clash of AI and supercomputing, and it's who knows. I'll say the same thing I've said for 5 years. It's risk capital. Actually, more like 7 or 8 years. It's risk capital. So there is no perfect solution. Bitcoin isn't flawless. If the blockchain is going to get hacked by super quantum computing, good luck. I mean, that's why you trade. So anyway, who knows? All right. So I'm just not in I was in the XRP. This is one of the first cryptos that I ever traded with a friend of mine that was in Qatar. That was back in the 2016, 2017 rip. I made like 10x on my money. And then it turned into garbage, and then we had this other rip through 2021. As soon as we got through the SEC probe, I converted into Bitcoin when I could. Otherwise, I literally sat on, I don't know, 20,000 Ripple that I could do nothing with. Doesn't matter. Like I see this and it's like, congratulations, you got money on Ripple, but I don't trust this is going anywhere. So I don't care. Bitcoin is more of the story to me. Bitcoin to me is like the S&P of crypto. Crypto being like market cap of Ethereum, Bitcoin is huge. I'll stick with those and call me old fashioned, call me boring, but I want big market cap and I just want like pretty traditional flows, right? So if we have, bond money going into Bitcoin, if we've got financial advisors with trillions of dollars under management, this is like, all the financial advisors in the world, if they're allocating 1% to Bitcoin, 2% to Bitcoin, those order flows in these securitized ETFs are monsters. And that's why it's only taken a year to outpace what GLD took 8 years to do and get $1 trillion in market cap. It's crazy. It's crazy how fast Bitcoin has ripped and rallied, and it's done it through all this crazy volatility. But now that it's at 100K and it's certainly proving to be way more legitimate, we'll see what happens. So I've already got the measured moves, 107 to 108, maybe some profit taking there. I'd love to get a pullback in the 90 to 80K zone, and I'll buy some more. Okay, anything on Japanese yen futures? I'm going to keep an eye on this one for 2025. If the Japanese yen futures comes down to this level, I'm probably going long Japanese yen futures. If I go to, I wish there was a dollar futures instrument, but instead I got to stick with this crappy ETF called UUP. If I want to fade the dollar, which I'm not going to, but if I want to fade the dollar, I can do this with options. So if we come up to these levels, I'll probably fade the dollar with some bear put spreads. So I'll issue some pulver alerts if I like that as well. Okay, anything else? EWJ bought some shares. I'm upside down, I don't know, 20 cents or so. I guess 71. I think I put that exactly at where I bought it. So 71.50. FTSE, DAX, hanging out near these highs with that big stretch away higher. I added this ETF in. This is Argentina. I don't know. I'm seeing a lot of smart macro people being long Argentina and short China. That's fine. I'm long China to basically get out for profit. I'm really happy on Monday that I protected most of my profit. So I'm still going to keep an eye on those income plays for me that I have with China exposure on Alibaba, Baidu, and JD. And for Argentina, this is another stock that, look, this is a good example of anything that looks like this. It doesn't matter what the instrument is. Anything that looks like this, I am not buying these highs. It's that simple. What I'm looking for is anything into a 50, 100, 144, 200. Anything supported here, I will get long. Anything. A 21 moving average, okay, fine. That's tight. That's a tiny pullback. Because we have a lot of these moves stretched away, I'm looking for any type of reasonable pullback. Give me something to buy, and I'm long. So do I like Argentina? Yep. And I'll add some exposure, when and where. Probably at, let's put $1,000 there, $1,000 there, $1,000 there, $1,000 there, maybe, or maybe a 1,500 and a 1,500. I like the exposure, probably a 1%, allocation. If I could put a break even in here, we go up to highs. I mean, it's an index, so it's not going to be like crazy gains. But if I took, let's say, a $3,000 investment, turned it into a 20% gain, it's not awful. Make $600 or $700, and maybe that happens within, I don't know, 6 months. Who knows? So, but this is what pretty much every stock that I see. If we get pullbacks, I'm deploying capital. If we stay at these highs, I'm not adding anything. I'm just going to wait. And so I have participation. So going higher, I'm still making money. Any participation, I'm still making money. But I refuse to chase prices at these freaking all-time highs. Okay. So I like the melt ups just like everybody else, but the cash that I have sitting on the sidelines, I'm going to wait for pullbacks. So, like I said, maybe I'm not aggressive enough, but I have seen what it's like. I have experienced what it's like to be fully invested as the market takes a big downturn. Maybe it happens, maybe it doesn't. But when it does happen, I'd rather be ready. Because if anybody got burned, and this is probably a reality check for a lot of traders out there, if you made money in 2020 and made money in 2021, that type of greedy complacency is what got a lot of traders burned badly in 2022 because you stayed fully invested and then the market fell 20 to 30%. Okay. And there was nowhere to hide because stocks were down, bonds were down, crypto's down. Forex was the only saving grace to diversify. That's hard when you have one asset and it was really the dollar strength or the Japanese yen weakness in 2022. That was the only thing that worked, So my point is, I don't want to be overinvested. I'll participate with, options so I can be leveraged, but it's all defined risk. Okay. So does that make sense? Don't repeat a burn in 2022. Because if you're fully invested going into that year and you don't protect your entire portfolio, it is going to sting and it's going to suck because there's nothing you can do. You're left just holding the bag at the top and hoping that price comes back to those all-time highs. And it might take months to do that. But if you have a horizon, you're fine. If you have, 3-5 year horizon, you're fine. So anyway, just kind of getting you a little mental preparation. EMAs, those are pretty simple. It's a 21, 50, 100, 144, and a 200. All exponential moving averages. CLF long-term is fine. I have some attractive levels on CLF that I'm willing to throw into. This is a steal play. I've traded on and off through 2020 to now. I've had some good gains on CLF. I just find this level really attractive coming back to COVID lows. So if I'm going to establish anything CLF wise, it's probably going to be at 8. I would say this, maybe 10 to start, 8 to add into it. We've been as low as like $5, but yeah, I would take a stab at it. I think if I participated here, probably $9 to $8 for like entry one, and then dollar cost average in. If I did let's say $9, I'll just throw it out there, $9 and $4. That's a $5 difference. So my break even $6.50. If I hold this stock at $6.50 and there's any amount of range trading back into the structure, I could still go after a 100% gain. So if I put, $2,000 to $4,000 a line, 1 to 2%, I can turn that into a full move, get another 1 to 2% for my portfolio. Do I want to hold this thing all the way to, 2022 highs? I don't know. Probably not. but that's about how I'd look at it. Okay. CLF and X are two stocks that I've traded on the steel plays before. Same thing on X. If we come into the 20s or less, anything in the COVID levels, I'm pretty interested. Alcoa is aluminum. We're trading at 39. This freaking volatile piece of crap. I got covered calls at 44 and 45. I thought we'd stay there and get them called away. It might still have a run here. So if we're going higher highs and higher lows, maybe I still get it called away. Otherwise, this just continues to be like I don't know, maybe a chop fest. There could be some type of broadening pattern here. I don't know. Something like that. If it's just chop suey. So I'll keep an eye on it. But I got some shares. I'm trying to get it called away. Anyway, any other thoughts? Any other questions? Uranium stocks. I'm in two of them, URA and URNM. I'm long. I've got calls out to 2026. If we have a big story in 2025 on nuclear energy, uranium could be a decent play. And honestly, this sounds crazy, but part of this uranium play and part of this clean energy, part of this infrastructure bill, part of everything that we need like CapEx spending to improve AI and change the world, it might be as simple as trading the Nasdaq. It really might be as simple as trading Mag 7 and the Nasdaq and just participate with the strongest companies in the world, making all the big moves and trailblazing this path to building things that make them more, they just give them bigger moats. They give them bigger competitive advantages. There's that side. And then there's also the argument of like, no, you need to be in small caps and small caps are going to outperform large caps. Maybe. But do I have uranium plays? Yeah, I'm in URA and URNM. Those are the only two that I'm in. Okay. All right. That being said, I think I'll wrap it up for today. It's nice to be back. I know we had a stream issue yesterday, so good stuff. I'm still watching my SPY today. If I see the SPY up to 609 or 610, I see the SPX up to 6100. I'm probably looking to hedge that for a Thursday, Friday broken wing butterfly. And again, hedge because am I an idiot for fighting the upside? Yeah, maybe. But I think going into the Fed next week, if we're up to these levels, I see a lot of market maker hedging going on at 6,100. So I could see that pushing it back down, getting us right back into the middle. And then we come into the Fed next week where the market's going to have to make a decision. But that being said, I mean, my gosh, we're at 96% probably the Fed's going to cut. So the market's like, let's go higher. So maybe that's the case. So I just think, look, enjoy the melt up. We're going to get a pullback eventually. I'm not a bear. I'm just cautiously bullish. May the melt up make everyone a ton of money. Protect your profits. All right, I'll let you go. See you tomorrow. Thanks. Bye.